I'm Owen Bigland. This is the Inside Edge video blog. Okay, let's cover a bunch of topics here. First thing I'm going to talk about is, as you guys know, I don't pay a whole lot of attention to statistics. They're so vague, you can break them down or manipulate them any way you want, but we'll just brush on it. The October stats came out from the Real Estate Board a couple weeks ago. I've been wanting to blog about it for a while. It's been sitting on my desk here. As expected, like I was telling you guys last month, that you're going to see, I predicted that you're going to see another pretty good size increase in October stats from the month before, from the previous October of 2018. And it didn't disappoint. I mean, October sales numbers are up 45% from October of last year. Again, to be expected, because last October 2018, again, was a pretty slow month, one of the slowest Octobers in record. But this now marks the fourth consecutive month of sales growth. And again, though, if you've been watching my blog since the summer here, I've been telling people, while the media was telling you that this market's in free fall and crash mode, I've been telling people to, hold up a little bit here. I'm not seeing it. And, this is from the front lines. I've always got lots of listings. I'm always working with buying clients. I'm selling condos and homes every single week. So I've got a pretty good bead on this stuff, as well as staying in touch with my associates, some of my colleagues in my office. What are they seeing from the front lines? And I've been saying for a long time here that the Vancouver condo market, Vancouver, let's call it Mount Pleasant, anywhere in the Vancouver market, Kitsilano, downtown, Mount Pleasant, Cambie corridor, the one-bedroom condo market has been unscathed. The two-bedroom condo market has been virtually unscathed. Townhomes haven't been touched. Even the starter level homes since last spring have been back up again. Very little inventory. Anything that's good that gets listed, it's priced right, is selling fairly quickly. And there's just not a whole lot for sale. The numbers, the sales to active listings ratio for October just came out. It keeps going up. And there is nothing now. The overall market now for condos is well into a seller's market. We're now looking at 29% for condos for the active sales to listings ratio. Anything over 20 is considered a seller's market. We never, as I've been pointing out here, have never got even into a balanced market on condos. And I can tell you, if we broke this down, that's covering everything in the Vancouver Real Estate Board for condos. So that's New Westminster, Burnaby, downtown Vancouver, everything. It's a wide brush here. If we were to take this one step further and look at one bedroom, good quality one bedroom, one bath condos in downtown or Mount Pleasant, Kitsilano, Fairview, so in and around the downtown core, I can tell you that the sales to active listing is well into the 30s. Strong seller's market. If we go up to the two bedrooms, not quite as strong, but still easily into the high 20s, low 30s. This has never slipped into even a balanced market for condos. Townhomes are about the same, 26% for the Greater Vancouver Real Estate Board, which is covering all those cities. Well into a seller's market. The detached market now, overall, this is east side, west side, everything, New Westminster, Richmond, is now at 17.3%. It's been slowly creeping up. So that is on the high end of a balanced market. And again, if you were to break this down further to starter homes in the Vancouver East Side, or starter homes in Richmond, let's say, we are now back sneaked into a seller's market. Sorry to break it to some of you guys. What I have to point out here, I pointed out for years on my blog here, again, I do not have any biases towards this market. It's zero. I sell homes in buyer's markets, seller's markets, balanced markets. I also work both sides of the deal. I'm on the listing side and I'm also representing buyers on the buying side. If you followed me for the last 10 years, I think my track record speaks for itself. If the market's going down, I'm the first to tell you that. As a matter of fact, back in 2012, I was telling people that the market is starting to slip back into a buyer's market 4 months before the stats from the Real Estate Board came out showing that. I'm always way ahead of it because these stats are slow. They're always behind the curve. Now, I don't know where the market is going to go from here, moving further into this winter and then into next spring. As I've always said here, the market could take a turn. This is our fourth month of pricing or of sales volume increases. Prices are also month over month. That's the other thing. People always look year over year. Year over year, prices are still down a little bit. Month over month, though, that's the important one. The trend is up now. Prices are going up on condos and townhomes, not down. But again, you can manipulate these stats any way you want. But I don't know where the market's going to go from here. This Christmas or in the new year, sales could go down 5 or 10%. Who knows? But what I've always said is step back from these statistics. They don't really mean much. Matter of fact, I'm a realtor and I don't even pay much attention to them. I tell people to focus on the long-term fundamentals of real estate. You need a roof over your head. Certainly beats renting. So let's roll out the latest stats from my friends from Gammon Living. Gammon is one of the larger property managers here. They send me an exclusive stats package. I've got many of my clients who don't want to manage their own properties. I usually refer them to Gammon, to my main couple of guys at Gammon Living. For 8 or 9%, they'll manage the property for you, put a tenant in it, collect your rent checks and everything else. Rental rates, contrary to what some people seem to think, continue to go up. The average one bedroom now in downtown Vancouver is $2,200 a month. $2,200 a month is getting you that's the average price right now, rental price for a one bedroom. 2 bedrooms are running at $3,175 a month. 3 bedrooms are running at almost $4,500 a month. These rates continue to go up, not as much as they were going up the last few years, but they're still edging up. They're not coming down. You're paying $2,200, $2,300 a month for an average one bedroom. So step back from it. Get your down payment together. If you want to live in Vancouver long term, nothing wrong with renting short term, but if you want to live here, you've got a good career and you're going to stay for 8 to 10 years, and you should be a buyer. Whether that's a buyer's market, seller's market, or balance market, I would ignore all that stuff. You're paying $2,200 or $2,300 a month. That's out the window. You're making your landlord rich, and I'm a landlord, and yeah, it's made me rich. Nothing wrong renting while you're saving for your down payment, or even better yet, move back in with your parents or share a house to bring down your monthly rental cost. Do everything you can. The hard part is to get that $50,000, $60,000, $80,000, $100,000 down payment. Once you're in and you're paying 2.6% on your mortgage, your cost to own is really not that much more than what you're paying right now for rent. So that's what you want to focus on. Markets go up and down. Right now, real estate market in Vancouver is starting to show signs of life and has for the last 4 months. Might be playing possum. Maybe it's going to go down after this winter. I don't know, but who cares? You need a roof over your head. You should be, and you're going to stay in Vancouver long term, you should be an owner. It certainly beats renting with some of these rates. Even out in areas like Richmond. I mean, a studio now is over $1,300 a month in Richmond, average studio price. 1 bedroom is running at $1,695. 2 bedrooms are $2,150 in Richmond. That's a lot of money to be spending on housing that you're not getting anything back for. You should be an owner, is what I'm saying. The last thing I'll just talk about again is just to reaffirm. So many people email me and comment on my YouTube blog. They've enjoyed my blogs. It's that positive affirmation that I give them, that they're on the right track. And listen, when I was in my younger years, I thrived on that too. I followed certain people. I had a bit of a mastermind group that, I always like to stay in touch with, just to be around these people, to get the positive affirmation that you're on the right track. Because of course, when you buy a house, it's your biggest purchase. You always, as soon as you pull the trigger, think, have I made a horrible mistake here? I just paid, the record-setting price for this house. I've got all my savings into this for the last 5 years. What if the prices go down 10 or 15% next year, which they might. But again, as I've blogged about many, many times here, you have to get comfortable with that. You have to get comfortable with the fact that you're going to buy that 1-bedroom condo in Cole Harbour, and 2 years from now, it might be worth $20,000 less than what you paid for it. But again, who cares? You need a roof over your head. Housing is a long-term need. It's not a 2-year need. It's not a 3-year need. It's going to be a 30, 40, 50-year need. And I can guarantee if you buy that property at 1-bedroom condo and keep it for 25 years, it's going to be worth far more than what you paid for it today. Guaranteed. I can guarantee it's going to be worth more than what you paid for it in 10 years. Even if the market goes flat between now and the next 10 years, on a $700,000 condo. In 10 years, you've already chipped off $100K right off the principal. So you're already up $100,000. It's like a forced savings account. But just keep it simple. Tune out a lot of these speculators that want to try and tell you to time the market or the market crash is just around the corner. They don't know what they're talking about. They have biases. And I see that so much. Look for transparency. Follow people that have transparency, that have been in this business for 20 or 30 or 40 years and are successful. Why would you follow an anonymous guy out of his parents' basement? What are you going to learn from a guy like this? But, the biases and the agenda that so many of these people have, I just cringe at it. You can pick it up in 2 seconds. They've been left behind. Rather than buckle down and do something and take control of their own actions, they decide they're going to put all this time and effort into complaining that somehow, if they keep putting out this garbage, the market will crash and they'll be able to buy in, even though they can't because they don't have 2 dimes to rub together to take advantage of any correction we do get, which we eventually will. We always do. 5 to 15% market corrections are normal and should be expected. We're due for one. But the egos on these guys are huge. They actually think that by posting endless cherry-picked articles on Facebook and you've got 3,000 or 4,000 followers, that you're going to have any impact on a $200 billion business. You're just wasting your time. I have no impact on this business. People always tell me how I'm pumping the tires on the long-term benefits of Vancouver real estate, which I am, because I believe in it. I've been there and done it. But I have no impact on this market. I could pump the tires all I want, and I'm not going to move the needle whatsoever. My blog is about teaching people the right way to do it, how to get ahead, how to buy your first property, how to retire comfortably, retire early, get your money working for you. I'm a positive, raw guy, and I also provide positive affirmation for thousands of people, not only my clients, but people from all over North America who have pulled the trigger on their first place or bought their first ETF and want to stay the course. They want that positive affirmation, which I'm more than happy to dole out to them. Just stay the course. Buy, hold, tune out all these negative people. Corrections are normal and should be expected. There's always one around the corner. S&P 500 as I speak right now is at all-time highs. My portfolio is just been on fire here. Actually, even just since the summer, my portfolio is up massively. Am I selling any of my stocks? No. I'm just continually purchasing more with the dividend income I get every day and on a daily and weekly basis. Not a week goes by when I'm not getting a fat dividend check from one of my holdings. I let it build up to about $2,000 or $3,000 and then put it into more stock. Have I ever been tempted to sell any of my rental properties over the years? I've had a lot of people over the last 20 years tell me, you're crazy, you should sell your properties. Market's at an all-time peak. Sell now. Crash is just around the corner. I've never listened to them. Why would I? Why would I kill the goose that's laying the golden eggs, as I always tell them? I've got tenants sending me fat rent checks every month. The property, sure, the value of the property is going to fluctuate up and down, but I know in 20 years or 15 or 18 years or 30 years, it's going to be worth a whole lot more than what it is today. I could care less what it does in the short term. I'm about generating cash, letting my tenant pay down the rest of my mortgages. That's how you have to look at it. That's how investors look at it. Speculators look at it on a day-to-day price basis. And that's a loser's game. If you don't want to take my word for it, just dig a little deeper. Buy some books on investing. Buy some books on real estate, the long-term benefits of real estate, the principal residence exemption, using leverage. I still get these guys that blog, I don't know where they're from. Some of these guys, they'll tweet or go onto my YouTube blog here. Some of these guys are incredible. They talk about, the cap rates are dismal. Maybe if you're paying cash for a property, an investment property, why would you pay cash for an investment property? It defeats the whole purpose. They obviously have no idea what they're talking about. The whole plan with buying an investment property, the cap rates in Vancouver have always been very mediocre. The benefit is you buy an appreciating asset with 20% of your own money and borrow the other 80% at 2.75%. Then you've got a massive pool of high quality tenants that are earning six figures that you rent those units to and keep them. Let the tenant do all the heavy lifting for you. But I'm straying off course here. The bottom line is positive affirmation here for you guys. Stay the course, buy your principal residence, max out your TFSA and your RSPs into good indexed, low-cost ETFs. I recommend Vanguard or iShares. If you want to get a little more progressive down the road, buy some good blue-chip S&P 500 companies like an Apple, Johnson & Johnson, a Visa, a Costco, Home Depot, Macdonald's. Spend some time, learn it if that's what you want to do. It can be an enjoyable experience learning about these companies and these CEOs and how the stock market works. Educate yourself on this stuff. It'll be well worth it when you get to my age or into your 60s or 70s. The payoff will be huge. And down the road, after you've got those taken care of, perhaps buy an investment property. Buy a simple one-bedroom condo in a good strata, in a good location in downtown Vancouver. You can still buy these condos for around $1,100 a square foot. I'm under the belief that with all the new inventory, which is very limited anyways, coming online for the next decade or so, is all going to be priced well above that. 18, 19, 2,000 a square foot and above. Vancouver is not going to become less desirable next year than it is today. It'll only be more desirable. That's just the way these good cities go. Put a tenant in it, let the tenant do the heavy lifting for you, take advantage of the leverage, and you're going to do incredible. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.